happy you're here. Let's talk about building this legacy. Yes, yes. So today, well, as you know, my name is Afua Jones. I am a nationwide board certified credit consultant. Started my career in 1994 with Equifax as a credit reporter. So I am not new to this industry. I also have my own DIY credit repair course, as well as my own 501c3 nonprofit where I work with HUD-approved housing agencies to help folks get in position to become first-time homeowners. So today we're going to talk about the 5 factors that make up our credit. As we know, we can't conquer what we don't confront. So as always, I want to remind you all that you can always schedule a free credit consultation with me. Again, I am nationwide, including the Virgin Islands, so I can help you at any state. But let's get a strategy together so that we can get your score moving in the right direction. So today we want to understand what are the 5 factors that affect our credit. So if we know what affects our credit, we can learn how to properly move through those factors and get ourselves where we need to be. So we know credit is something that we're going to always be kind of chasing and following and staying on top of throughout our adult life. So let's just make sure we understand the ground rules, right? So the first thing that lenders really want to know is your ability to pay debt back. What does your past payment history look like? Are you paying your bills on time? It will help the lender figure out your risk factor, if you're worth the risk. So 35% of your credit score is based off of your payment history. This is why it is imperative that you pay your bills on time. You need to know the billing cycles of each of your lines of credit. So what that means is you need to know when the new billing cycle begins and when it ends, because by 5 p.m., when that billing cycle ends, that's when they're going to report to the bureaus. So you always want to pay your bills on time and before 5 p.m. the day that it's due for sure. So 30% of your credit score, 30% is based off of your usage. So, having accounts owing money on them doesn't necessarily mean that you're a high risk. But they do want to see how much usage you have, how much available credit. And if you're maxing out, then that's telling them that you're maxing out your credit. Are you paying it on time? So you never want to be more than 30% above that limit. So an example of that would be if you have a credit card with a $500 limit on it, 30% of that is $150. You never want to carry a balance higher than $150. We know that life happens. Sometimes you may need to use more credit. Then just know that by the time that billing cycle is due, you want to have that balance as close to $150 or lower as possible, right? So 15% of your credit score is based off of the credit history. Right. So that's going to be the length of credit. So they want to look at how long your accounts have been established, including the age of the oldest account, the age of the newest account, and the average of all of the accounts. So that's how they're going to figure it. They're going to take all of those things into consideration to come up with that particular factor. So this is why you want to be mindful. You don't want to be closing accounts. You want to keep things open, get your balances paid down. Your credit mix. You want to have a good credit mix. 10% of your credit score is based off of the type of credit mix. So these are some of the things that report on your credit. Credit cards, of course, lines of credit, home equity loans, car loans, personal loans, student loans, and mortgage loans. So those are like different mixes, right? Installment accounts, open-end accounts. Those are accounts like American Express or Amex, as we call them, where you're paying the full amount at the end of the month. Those net 30 accounts. You want to have a mixture. You want to have that car account. But then, of course, you want to have some different types of revolving. So 10% is based off of the mix. And then the last 10% is based off of new credit, right? But here's, I always have to give a little tip at the ends, but here's something that may surprise you, right? Here are some of the things that do affect your credit score. So I made a list. So these are some of the things that are that will factor in how strong your credit profile is, or if you need to clean up some derogatory stuff. So obviously, outdated, inaccurate items can definitely adversely affect your credit. This is why you want to holler at a board certified credit consultant to help you clean up those inaccurate items. But here are some things like Parking tickets. If you don't pay them, they go into collections. That can definitely affect your credit, maybe even a judgment or garnishment, those types of things. Utility bills. Utility bills are something that can go on your credit, especially if you're one of those type of people that set up self-reporting. So just remember, if you're paying on time and you're paying everything good and they're reporting that, that's great. But if you're not, they report that too. Medical bills, if they're not paid, those can go into collections. Delinquent child support, those can go into charge-offs and collections. Let's talk about those things in your free consultation if you need help with those. When you pay off a loan, just remember that your credit will actually take a small hit because there's no more activity on that account. So you lose that movement of that account. So just remember that. A lot of people think because I paid off my car or paid off a loan, I'm good to go. But that's no longer in your mix because you're not paying on it anymore. It's not an active account. So closing a credit card, we know will affect you. Not paying your rent, that can get put on your credit report if that particular landlord is reporting to a bureau or all three bureaus. An old gym membership, bank overdrafts, requesting a credit limit increase, they will actually pull your credit for that. So you want to have yourself in a good position before you start doing that. And opening a CD, it will pull your credit for that. So just a couple of things I want to give you to keep in mind. Again, you can't conquer what you don't confront. So having a mindful idea of what are the factors, how to move, how to use those. Don't forget to check out all the different strategies like the micro payments and different things that we've discussed in the past so that you can start building your legacy of financial freedom and great credit. See you guys soon. Don't forget to reach out if you would like a free consultation.
I know they gon' remember me, 'cause I'm gon' leave a legacy.